Welcome in to the Crypto Bunker podcast. Today I'm going to be doing just a few things about Trump, and I think that what we need to recognize is that if you listen to these macro shows, especially any macro people who are involved in crypto, in my opinion, those people are retail. They are dumb money. They're not smart money. So like, podcasts that go on like Unchained, or any really crypto person, Raoul Pal sort of class of people, they have essentially only managed to understand 2008 until now, which we have been able to print our way out of basically up until now. And I think that we're finally at the point where liquidity is tight and we have a ton of supply of long-term treasuries that has to come onto market. And if they print through QE, that is going to trigger potentially more inflation down the line. And they know that now. And the public knows that. And people are not for it. Politically, people don't want QE. The only people who want QE are the people who want their bubbles back, right? They want the bubble to continue. And the issue with a bubble as well is just the wealth gap that it creates. We have such a huge wealth gap in this country and in the world, even more than the US. Top 10% of people account for 50% of our GDP consumption and spending. That's not sustainable. And essentially what politicians realize is that the stock market has to continue to go up, or else the GDP will go down, because it's all about making the wealthier wealthy so that they can spend more and more. Because at this point, they're so wealthy that, again, they just account for so much of the economy. So this becomes a massive issue, socially, culturally, politically, and really that's why we've seen this back and forth now of, blue to red to blue to red, is because the wealth gap is getting greater and greater, and people just want massive change. And Trump came in and promised that he was going to have massive change. Bessant said, we don't care about the stock market. We don't care about Wall Street. We care about Main Street, which meant they were going to allow the stock market to fall, and they were going to try to bring manufacturing back to the US to create jobs for the middle class and to bring prices down for the middle class and to, make mortgage rates lower again. And they were not only going to do it through, kind of the tariffs and kind of allowing the economy to fall a little bit, or the stock market to fall a little bit. They were also going to do it through lowering the oil price by pumping more oil. And they're going to do it through many different reasons. But I think Trump, essentially was told that, you can't do this. This isn't going to happen. And I'm not saying that he should do it. I'm not for the tariffs. I think they're all like just a terrible idea. Doesn't really make sense, a lot of what he was doing. This isn't the way to go about it, to just like create complete chaos. But that sort of seems like that's what he likes. Like he likes this sort of chaotic environment where, he's the center of attention. Everyone's looking at what his next move is. And I think that right now he feels that power and that control of quote unquote controlling the stock market because he saw that when he paused the tariffs, the market rallied 12% and that the market bottomed on that. So now everyone who is the macro expert all of a sudden um is basically talking about how Trump, it's all based on Trump. The stock market is all based on Trump, and he's going to cave to the tariffs, and they're going to appease to the rich and to the markets because the markets are just having a fit, and his approval rating is tanking, and so they're just gonna give up on the tariffs, and they're gonna go easy on the tariffs. And this is definitely possible. And but I don't think there's going to come a point where it doesn't pump the market. And that's when we're in trouble. Because right now the Fed all of a sudden is in the background. Like for the past week or so, no one's really talking about the Fed. All of a sudden, the 2-year rate's coming down, the 10 years coming down. Things are kind of smoothing out at this level, and that's what it feels like. And all of a sudden, it feels like the stock market is correlated to bonds. And it's weird because, it was only a few weeks ago that bonds were crashing and the stock market was also crashing. So it's all of a sudden now bonds are rallying, stock market's rallying. So we do have this correlation that's sort of happening. And I think the correlation is do we trust Trump and this administration to do the right things? That's essentially what the bond market and the stock market are trying to say at this point. But I just wanted to say, I just don't think we're at a good point in our society if we're relying on Trump to pump and dump the markets like this. To me, it signals, it doesn't just signal a top. It honestly signals to me a secular top, not just a cyclical top. To me, it signals something much deeper and fractured in our society. And I understand that, maybe that this time isn't different and that the stocks will just continue to be, a Ponzi scheme that continues to go up forever. But eventually that has to come to an end. And I think that the situation we're in right now is kind of the perfect situation for it to come to an end. And, we were at peak high valuations as Trump, entered it on inauguration and everything like that. And, I think it was a 23 price to earnings. And I think that, what we've seen over the years is that, price to earnings doesn't matter anymore. And I get that. Basically what we've seen is that, the stock market is kind of like a store of value. It's become a store of value more than anything. And so, people just save their money in the stock market. It's all the people's savings that's in the market. But don't you think that Trump is the perfect person to do the Great Reset? Because, everyone always said you'll own nothing and be happy in the World Economic Forum. And then Klaus Schwab said, we need to change the strategy so that the majority of these freedom fighting people trust us again. We need to put people in place so that we can be trusted again. And it's so weird that Glenn Beck, of all people, is the one who wrote about Klaus and the New World Order. He's not going to recognize this because he's a Trump propagandist now. He's essentially if you go to his videos, when Biden was in office, it was like total doom and gloom constantly. Now it's like you cannot find one video from him except the AI stuff, which all of a sudden he's like a super AI advocate. Now he does some like AI doom stuff that's in there, but he's like, pleading with people that you need to like, be all in on AI and learn it before like it takes over. And, like the way he's talking about it is very delusional. Um, and he's also just, he's like a Trump propagandist. Like there's nothing bad about tariffs. There's nothing bad about the economy. Like, how can you not make a video right now that's at least not talking somewhat negatively about what's going on in the world? It makes no sense. We have Trump deporting people and stopping people in the airport and revoking visas of college students. And people aren't going to send their kids here to go to school. And I think that that's like something people aren't factoring into the economy. They're just saying like tariffs, tariffs, tariffs. But look at the, Open Table app in a place like Miami, and you see that a place that takes 6 months usually to reserve a table is now you can get a table like the day of to get something. And that's just anecdotal from what I'm hearing from different people, but all of a sudden that's all that people aren't talking about that. But that's a secular shift. It's not just a cyclical shift. And I think that the problem is that if the stock market fails and actually doesn't keep going up for once, which God forbid that it keeps going up, because that would be a disaster. Okay, that would be, I think, more of a disaster than if it went down and just sort of went sideways like it did in 2000 to 2008 or whatever. If it just keeps going up in a bubble, then the wealth just continues to be disparaged. And these people who are all unemployed, who are COVID injured, who are working, multiple jobs, working at Uber Eats or working as an influencer, making $600 a year, or $600 a month if they're lucky, they are counted as employed. They're not unemployed. So the unemployment numbers are bullshit. They're fake. They fudge the numbers. They're not real. Like nobody works. If you ever drive around, at 1 o'clock or 2 o'clock or 11 o'clock, not lunchtime, not, commute time, everyone is out. No one's working. What are all these people doing? So I think that these are the types of things that they're just unsustainable. And I think that what will happen if the stock market crashes or continues to go down is that there's not going to be an economy there because the middle class can't bail anyone out this time. In 2008, the middle class bailed out the hedge funds by losing their homes, and no one went to jail, and all the hedge funds and the banks, they got away with murder. No one went to jail. People lost their jobs, and then the market, they printed their way out. So it was like a rug pull. They pulled the rug from the middle class, and then once the middle class was dead and gone, then had no money to buy the dip, they pumped it to oblivion. And up until now, really, it's been a pumping scheme. And they continue to do this now. And people are now losing their jobs to artificial intelligence. People in the tech industry after 2021, when things got, super pumped up by the Fed and all the money they put into the system, all of these corporations have been cutting and cutting and cutting jobs ever since like 2021, 2022, or I should say probably beginning of 2022. Ever since then, these big corporations are not really hiring, like big tech, all the Mag 7, they don't hire people. They don't hire college graduates anymore, barely, unless you're in a certain location, if you're lucky. But for the most part, if people leave, they don't hire anyone back because they just have AI, or they just learn how to be efficient because they're essentially just monopolies. They're just big machines at this point. So all of these things, right, are factoring in to my thought process, which becomes more of like this large shift that we're experiencing. It's not, to me, the issue is, will they actually allow it to deflate? And I think that Jeff Booth has talked about this a lot, but he basically says no, they're not going to allow it to deflate. And that's what everyone says, right? Everyone says they're just going to print their way out and everything will keep going up because they can't allow it to deflate. And I've gone over why that's the case. But my issue is if we have a shock to the system, like we have right now with international travelers not coming to America when America is a service-based economy, a lot of the stuff we shifted from manufacturing to services. A lot of towns employ a lot of people who, again, maybe they don't have a corporate job, but they're working in service jobs. They probably won't factor into the employment data when they get laid off. But people aren't traveling here. 800,000 less Canadians traveled here in March compared to last March. That's March. That was before the tariffs. Now it's just a dead zone. And these airlines are not, being truthful. They should be saying that instead of saying no guidance, they should be saying this is a disaster, but they're just playing political games. The only person who didn't was Southwest Airlines, and he was saying we're in a recession. Because his stuff his business is a lot of domestic travel. So that's not even international travel. Okay, so the domestic economy itself is having major issues. And I just don't think people are factoring these things in. And where does Bitcoin play into all this? Where does gold play into this? Where does the dollar play into this, right? These big macro shifts, where are they playing in? Bitcoin, to me, I'm nervous for Bitcoin because I think that Bitcoin has been the play on QE. It was invented in 2009 or it came out in 2009, right when they started pumping the QE market. That was when the infinite sort of QE money printing liquidity put that everyone talks about, Raoul Pal, right? Like his data and his mindset and what he talks about only goes back to 2008. It doesn't go back further than that because he believes that we're in a new regime now that will never change. People like Jordy Visser, who go on the Raoul Pal podcast, they say the same thing. There is no such thing as a recession. They say we can't have recessions anymore. They just print their way out. Everyone keeps saying the same thing. My question is, if the middle class can't bail it out this time and the stock market crashes, like, are they really going to be able to print their way out this time with valuations this high? And I think that's why Jerome Powell is hesitant to cut rates right now because he knows that he has to save that, if you will. You can't do it too early because the valuations are too high. The market's too high anyway, even without all of this mess that we're in. So my question is just what happens when the market crashes and QE doesn't work this time? That's a huge issue. And I think that it will be reflected potentially in the bond market. And I will say that the 10-year rate is in a bearish trend according to HedgeEye now. So the trend for the 10-year is 421 to 447 at the top end. Now it just hit its lower end of the range today, but and I've been someone who's been in and out of that trade because I do think like, like everyone else, recession equals 10-year rate, at least like the big macro people, and the smartest people in the room, if you will, I believe still think that bonds are going to work. And maybe they will in the short term, but again, once they start printing, you would think, oh, QE, well, that's them buying bonds. Um, okay, well, again, and this is where it comes into play, like, is that just going to, again, just continue to pump the market to all-time highs again? Um, and I understand that like America has really good demographics. We have like our system is set up so well, um, that, but if someone comes in and messes up that system like Trump is, maybe it's not going to end, in a good way. I think we've had a lot of privilege from other countries who have, kind of given up a lot to help us out, I think. We're the ones who are rich, fat, and happy in terms of like our consumer base, our stock market, um, all of that stuff. And so by Trump, trying to like extract wealth from these other countries or something, like it makes no sense. These countries are not wealthy. We've already sucked the life out of them by exporting our inflation to them. When they did QE, in 2008 and 2009, after that, there was like a crisis in the Middle East. In the 80s when they took us off, um, or the 70s and the 80s and took us off the gold standard, there was a crisis in the Middle East. Like, um, this stuff, does happen in other countries um, when we do these things. It's not just like we can do them and nothing happens. And I believe in karma, and I believe that the US has some bad karma from our past. All the things that we've done just to stay at the top, it has to come back around at some point. Um, and I think that, I'm worried for Bitcoin in that scenario. Now, I still think holding some is good because if they do print their way out again, you have to be in those assets because like gold and Bitcoin and potentially stocks, because you have to play the game. You have to continue to play the game. But that's why I follow the hedge eye guys because, it's an objective process. I don't have to make these calls. Right now Bitcoin is in bullish trend, gold is in bullish trend, the VIX, the volatility is in bullish trend. The 10 years bearish, which means bonds are bullish. S&P is bearish, oil's bearish, ETH is bearish. So, I don't have to make these calls. I can be patient. I can wait for the top end of the range to sell and bottom end of the range to buy. And, his process is second to none. But these are just my opinions. I mean, it's not like I'm not like managing my money based on my own opinions until that becomes a reality, then I would. But at the moment, I'm trying to be objective with his process. I will say, I mean, I do trade a little bit, um, but at the end of the day, I mean, Bitcoin here at 95,000, the top end of the range is a lot higher, 99,193. And, I sold some at the close today, around 95,000. And I think what is going to happen tomorrow, which will be Tuesday, April 29th, is that Bessant and Lutnick will be speaking about deals with other countries. And they're going to try to appease the market. And I think that it's hard to tell. I mean, it's hard to get a read on it, but I do think, I don't know, for me, actually, tomorrow, it could be volatile in a bad way. Um, because volatility was kind of at the low end of the range today. So I do think it's very possible that, with volatility having such a big upside potential to 37, that we could see a correction this week. And I've said that in my previous videos that I do think we'll get a Bitcoin dip, and I think it'll be a big one. I think we're running out of steam here. This is a logical place to stop. There's a lot of basically selling pressure that was buying pressure. Now we're at we're right up to the bottom of the channel, the trading range that we were in before, which was like 108 to 92 or 94 in that range. So we're right around that. And I just think that at this point, Bitcoin is due for at least a correction. And I'll be buying that, and we'll see if it can hold that. I think right now, though, we're just sort of in the chop bucket of volatility. And so it's not, I don't think it's like the safest play right now to be all in or just kind of like long, really long right now. We do have the NASDAQ, down a little bit after hours, just 0.06%. And on the day, it's like negative 0.03. So it's kind of sideways on the day. Futures for the S&P are down a little bit. Could the S&P come up to 5,700? I think it could. The daily RSI is probably due for like a little bit of a spike. And I don't know, it'll be interesting. It'll be interesting, but I guess I just wanted to put that out there that I just think that the situation we're in right now with Trump kind of controlling the markets is not healthy. And it sort of screams to me, like dictator, banana republic type stuff that, we have to just be hanging on every word of the administration for markets to go up and down now. I think last year and previous years, it was always like the Fed. What's the Fed doing? Now it seems to be what's Trump doing. Because I think it's almost like they handed the ball off. Oh, we're just going to forget about the Fed now. We need some kind of the next psychological operation. And Wall Street, gets paid for markets to go up. They do better when markets go up. They can short and they can have puts and stuff, but it's a lot harder because retail and most people are buying. So people are buying, buying, buying. They want to take that and be able to use it to their advantage. So for me, just staying patient, staying off leverage, all those basic things, just kind of chilling out. Just trying to think about these things and just kind of thinking about, what the future holds for our country and for the young people. I do hope that we get a chance, to buy, houses at lower prices and stocks at lower prices and rates, mortgage rates lower, and because that's what people wanted, I mean, that's what people voted for. And if we don't get that, I think it'd be really sad, you know. And I get that, like markets going down would be bad for like people being employed. But there's smart people and good people who have factored that in and who are, at a safe point in their career and their job, and they've saved up money and they're waiting for the opportunity. And if it doesn't come, I just don't know how society can continue to function if we don't have recessions and if we don't have those resets in the cycle. It just, it's like this pent up energy that just keeps kind of blowing up this bubble bigger and bigger. And I think what they realize is that they have to keep trying to blow it up, or else it's going to be really, really bad if they aren't able to. And that is why we're sort of getting late in the hour of the American Empire, because, eventually they're going to have to buy the long end of the bond market, which right now they don't. They focus on the short end, because they're going to have to keep printing. I don't know. I mean, I think that they're going to try to also use like AI and like AGI and things like that to make the excuse of why the market is pumping so much. And that's where I come back, like maybe the odds are good that they're just going to pump this to the moon, but you know, I don't have to make that call again. I really don't. I use the hedge eye process, and I hope that I can continue to give you guys that information out there that maybe can't afford the hedge eye process. I mean, it's $50 a month for the macro show, and you have to know, you have to really kind of study and understand what he's saying and be able to understand, the language that they're using. And it's taken me years. I've been on and off with it for like probably 4 years now. And I also use the Bitcoin trend tracker, which might be more affordable for people out there. It's like $15 a month. And it is a lot, like $50. I can barely, get, I don't like to pay that fee, but for me, it's just too valuable. It's worth it to me. I'll take away that $50 a month so that I can manage my assets properly in my retirement, so I can be an active manager. Because, being able to make your own decisions with your retirement, with your stock portfolio, with your crypto portfolio, that's freedom. You should be able to choose, and you should choose, and you should do the research, and you should understand where your money's going. That's true freedom, and just going into a passive fund that is like, set up for, 60/40, or, setting you up to retire at a certain age or whatever. I just think that's BS, I mean, it's just like you're feeding into a system that's just using your liquidity for their own stuff. I mean, I just don't even trust that it's like there, until you need it, right? It's like a number on a screen. But if you can transfer your stuff to like a brokerage account in your retirement and then, trade stuff from there, that's more of like a little bit more of your property in possession than just kind of giving up into that passive fund. I mean, I can't even imagine doing that actually. Like, I can't imagine putting my money into something that I don't even know what's in it. That's what a lot of people do. They just trust that I need to retire by 2060. Here's my money. Here's my, $800 a month that I'm putting into this from my salary and my, employer match. And it just goes into this thing, and it's like crazy. It's absolutely crazy. I mean, there's like international bonds in there. You don't know what's in there. International stocks. A lot of young people have been invested in the Russell 2000, and they've gotten screwed because the Russell has underperformed. But it's supposed to be more risky and more return potential. So they put people's assets in there who are younger in a bigger percentage than they do people who are older. So again, the boomers came out big again because they were more in S&P 500 probably with those age related funds. So that's probably enough for me for now. Hopefully you got something out of the video or podcast. And if you did, please like, subscribe, and have a great rest of your day.